Okay, good afternoon, one and all. Good afternoon. Good afternoon. Welcome to the weekly live stream here at Funded Trading Plus. Hopefully you're well. Hopefully you all had a good week. Gosh, doesn't the weeks just fly by? Seems to be a Monday live stream every day of the week. There you go. Does seem to fly by, but welcome. If this is your first time joining, then a special welcome to you as well. We encourage interaction. Do let us know where you are tuning in from in the world. Let me know the level of experience you've got as well. These streams work best if there is two-way interaction. Anything you want to ask me, this is your chance. Obviously, I've been around the block quite a few years now in the education space, lots of social media stuff out there. Your chance to interact with me live. So do get involved. If you want me to look at anything in particular, any particular charts, any particular trade ideas that you have, just let me know. And we will address it as well. So yeah, drop in the chat. Let me know where you're coming in from and the level of experience. I want to make sure that I'm pitching this at the right level. And indeed, if you have any suggestions as well, any suggestions on what you'd like me to cover on a weekly basis, then I will do so. I've had some people say that I spend too much time on fundamentals. Some people say I don't spend enough time on fundamentals, technicals, and so forth. So I'm really, this is your chance. This is your live stream. So do let me know any thoughts that you may have, anything that you want me to do differently. Of course, every Monday we do have a competition as well where we give away two assessment accounts in our prop, 12.5 grand assessment. So we're giving away $25,000 worth of potential funding and it's absolutely free to attend. And basically, we need to guess the price of gold. Now, last week was our first week doing it this way round. And what I will do now is I will announce the winners of where gold of the competition from last week. Before I do that, let me just show you. We basically use the Oanda only because that's the one I had on the screen at the time. We're not affiliated with Oanda any shape, way, or form, but basically they're all pretty similar. And you'll see here that gold last Friday, this red candle here, red candle here, closed at 3,204. Okay, so that was the weekly close. My target was lower. I was a little bit more pessimistic on gold. It certainly did trade lower. We got down quite nicely at one point, bounced up to close a bit on the highs, well, on the highs of the lows. But it was definitely a negative day. So I got the call right, just didn't get the magnitude of it right. So 3,204 was the there we go. 3,204 was the competition, and the winners are basically Ashwini Patel from India. So congratulations to you, and also Hamed from Morocco. So these are our two winners. Both of you guessed the 2,000. That's wrong, isn't it? It's not 2,300. It's 3,200. So both of you guessed 3,200. So you're $4 away from that. So just ignore that. It's basically 3,200 was the close, and you two were the closest. So congratulations to you. I presume you've given the correct email address. Of course, you need to have the correct email address in order to get an email from us. And we'll be sending an email to you shortly after this stream with instructions on how you can avail your close, your price. So that's guessed it pretty accurate. So well done you. It's about a 3% drop, wasn't it, in gold? So you've had a good call on that. I called it, as I say, right direction, but not to the same magnitude. I was getting very pessimistic, actually, expecting the dollar to have a bit of a rampant to move higher, but that's where it goes. You never place trades in the markets on the back of these little hunches. They're based on technicals, of course, but there you go. And hey, the new competition has just opened now. So you've basically got until 1:50 today, which is 45 minutes from now, So 45 minutes from now, get your gold guess in on the form that's going to be dropped in the chat here in a moment. If it's not been dropped in already, you'll see the form here. Get your email address in there. Make sure it's the right email address, otherwise we won't contact you. And put your best guess in. Okay. So, and 2 more prizes of 12,500. And I'll announce that again, exactly as we did today at the next week's stream. Before I get into the fundamentals and the technicals, I'll give you my view on what I think will be happening to gold this year. Please do not let this affect your decision, but I'm going to have my own guess as well. I can't obviously win. I think gold found some support. I think we could see some support coming into gold. Obviously, this big move down, obviously to do with the tariffs at one point. Now we're seeing a bit of weakness coming in to the US dollar. A bit of weakness comes into the US dollar, basically means gold becomes a little bit cheaper. It's kicked off this week in bullish momentum. So I wouldn't personally be surprised to see gold make a bit of a recovery. I like a 50% move, as you well know. Let me just get rid of all the drawings on here for now. I like to see a 50% move. The range we've had for gold over the last since the first week of May has basically seen us up to 3,430 down to 3,100. A 50% of that move comes in at 3,276. Okay, so it's not far from here. I would like to see gold trade up to this level personally, with potential for it to break that level and then see. So my pick would be 3,3. I'm going to go for 3,345 personally, based on a little bit of technicals, bullish momentum, bearish dollar. I'm just looking at this now. This move you saw in gold last week, where did it pull back last week? Where did it hold? It held exactly where we had this price action before, the structural zone down here, where we rolled off negative and then we shot up through there. So that was always going to be the support zone. I think my support zone was, my target was down here, but I think that target 3128 from last week, looking left on the chart, I know it's hindsight, but that's exactly where you saw the negative fall off from last week. So that's puts in that bullish pin bar, bullish candle. These long wick candles here, when you see the main body in the top sort of half, top third really for me for a pin bar, but certainly in the top half, this shows you that this level here has been respected by not just you and I, but maybe by the larger players in the market. That rejection means this should act as support if we get back down. We've seen these buyers coming in at these zones, maybe more buyers down there, split buyers. The institutions don't all put all their orders in at once, do they? They sort of they split their orders. So I'd expect to see some support down here. It stops really below, but I would think gold has got the potential to move higher. Right. So the link is not working. The link is now working apparently. So get your guesses in. Get your guesses in, and then I won't look at them until maybe the end. It does work. Thanks, Azar. Good luck with that to all of you. Okay, so what we'll do, just so you know what to expect over the next 40 minutes or so, I'm just going to go through what the markets have been doing last week. We'll look at the main runners, the main sort of moves. Bit of a quiet week actually, but we'll go through it anyway. We'll look at some of the fundamentals that we can expect out this week. Now, I always say this, and I think it's fair to say that even if you don't trade the fundamentals, I still think it's important as traders that you are aware of the fundamentals. There's basically one theme going on in the markets this week. We're going to go through the technical, the fundamental releases, but there's one real theme going on about this week, and that's basically the US debt. Now, the US debt, which is sort of almost running out of control, compounded now by what you're seeing in with the Trump administration. This is going to have knock-on effects on various various different asset classes. And being aware of the fundamentals that are driving the asset classes in a particular direction, I think, is important. Even if you're not trading them, it does potentially help you from keeping away from overcorrelated trades. Overcorrelation, I think, is one of the biggest reasons why a lot of traders, end up blowing up trading accounts because they're in trades and they think they're completely random and they're not. One thing happens to the fundamentals and it drives everything in a particular direction or opposing directions. And if you're following a trend, you might be an uptrend in something, but which would equate to a downtrend in another asset class. At the end of the day, if you're going to get stopped on one, you might get stopped on two. So you need to be aware of the fundamentals that are driving those asset classes, I think, is incredibly important. As always, got to say this, I know it's boring, but I need to get this out just to protect myself as much as anything, and of course, as well, the company as well. This is meant for education purposes only. Any of the calls I make, any of the trades you might see me take, if I take a trade live on, and it's live on the stream, this is not a signal service. You will not make money consistently by following the odd trade that anyone puts out, on a particular live stream. You might get lucky, you might not, you might lose. But trading is not all about, picking one trade. Trading success is based over a large sample of trades. It's based, I call it the law of large numbers. You need to have an edge, and you need to have that edge play out over time, not one trade. So if I call, I'll call a few biases today, and I'll look at some levels, but don't obviously, trade on the back of them. So this is the disclaimer: education purposes only. You should be aware of the risks associated with trading at all times. Jigger, hi, good afternoon to you. Good afternoon to Mamu. Good afternoon. Hopefully you're in good form. Pip Pray, please explain the details of how asset market structure. Pip says, let me just pull this up. Sorry. Please explain details of how to assess market structure. That, Pip, is really a whole lesson for itself. I prepared certain things I want to discuss in this 45 minutes. I haven't really got the time to talk about market structure, but I will certainly try and get that into maybe a 15-minute session from next week when I can put something together for you. So I appreciate that. I want you to give me clues on what you want me to talk about. Market structure. There you go. I will put something together to discuss market structure next week. Higher time frame analysis. It is key. So thank you for that. All right, last week's movers. As I say, bit of a quiet week. Gold was down 3% on the week. S&P 500 was up 3.5%. With the relaxation and the winding back of Trump trade tariffs, which were, I think he's lost a lot of credibility personally. I hope he's not listening. He puts the tariffs on, then he rescinds them, pulls them back, and basically the stock market had a bit of a breather, up 3.5%. Bitcoin, volatile usually, only up 2.5% last week, basically on the back of a softer dollar. WTI, that had a 7% move the week before, only up 1.5% this week. And as I say, the dollar was down about 0.6%, 0.7%, depending on what you're measuring it against. So the dollar was slightly weaker. I think the biggest thing that happened over the weekend, which is why the markets are kicking off in the way they are at the moment, is that the Trump administration had its tax cut unfunded. Tax cut basically approved, which is basically causing a downgrade now by, you may have heard of Moody's. It's like a credit rating where they sort of assess risk by holding certain assets. So what they've done, they've basically downgraded the US sovereign bond market. So they've basically downgraded treasury bonds as an investment. Not necessarily that you won't get paid out, because a treasury bond is like an IOU, like any bond. It's an IOU, and you get paid out at the end of its maturity with the interest payments along the way. But they've downgraded. Now, the reason, very broadly speaking, and I don't want to go too much into the economics of it, But if you think about it, these tax cuts are unfunded. Now, you already have a massive US trade debt, okay? And the way that a government or anyone services a debt is that they borrow money. And they borrow money by issuing bonds, treasury bonds. Now, if this unfunded tax cut, needs to be funded, someone said it's going to cost something like $3 to $5 trillion over the next 10 years. It's a lot of money. These tax cuts that Trump basically, wants to, potentially drive the economy. But but the analysts are saying, the economists are saying that's going to cost about $3 to $5 trillion. Right? So they've got to fund that tax cut. And the way they fund tax cuts is basically by issuing more bonds. If you issue more bonds, the bonds that you are holding become less worthy. Yeah. If there's more supply of any asset, it becomes cheaper. So bond prices are coming lower with the potential of much more bonds being released over the next weeks, months, years. And because bonds are becoming cheaper, that means the yields go higher. So US Treasury yields at the moment are pushing up. I'll show you that. I mean, look here on the, we've got 10-year yield. So this is the 10-year bond yield. Okay, so the 10-year bond yield has been on its way up pretty much from 3.9 all the way up to over 4.5% at the moment. Okay, so this big move you saw back in, sort of middle of April, which took bond yields down. We thought we were going to see loads of rate cuts and what have you. Because the bond market is now becoming depressed, yields are going up. Bond yields are now at the highest they've been for a while. We're at an important level from last week, hovering around the 4.5. If we break through here, bond yields could indeed push back up to 4.6. But it is quite a crucial level here. So that's basically what has been driving the markets recently. And that's one of the reasons why you're seeing the stock markets under a little bit of pressure. Okay, so let's have a quick look then briefly at the economic calendar for this week. What's going to be driving the markets? We're a bit light on the macro front. Not a great deal going through. Bear with me a sec. Yeah, not a great deal going through this week. A couple of things to keep an eye on. This afternoon, for example, we've got a whole bunch of Fed speakers. Okay, FOMC stands for the Federal Open Market Committee. Okay, and these members, Bostic has been speaking already today, actually. He started speaking earlier. I saw him talking a lot earlier. Yeah, he started at 12:30, I think. Bostic has said inflation not moving to target as fast as anticipated. US dollar facing pressure after Moody's downgrade. Yeah. So Bostic speaking, these Fed speakers are important because they ultimately decide on where interest rates go. So these are sort of speeches that we can get clues from to how they will be voting at their next FOMC meeting. So I know you're not going to be listening to these. I have them on coming over my Squawk, but just be aware that if you're trying to form a sort of like a macro view, hearing what they've got to say is important. I mean, they're yellow folder announcements, so maybe not so important, but nonetheless, be aware of them. Tomorrow, okay, we've got a rate decision in Australia. Okay, so that comes out at 5:30 a.m. UK time, and that will be 3:30 in the afternoon, I think, in Australia. And they're expecting a rate cut. Okay, so we're expecting to see a rate cut in Australia down to 3.85% from 4.15%. That's a 25 basis point, 30 basis point cut. So we're expecting to see a cut there. And anything, if they don't cut, because when something like this is priced into the market, it's the adverse reaction to an unexpected event that moves the markets. If they don't cut interest rates, then you could expect to see the Australian dollar, trade higher. So if you are in an Australian dollar position, be aware of that tonight when you log off. That in the middle of the night, before you get to the desk in the morning, there will be a rate decision which could put volatility into the Aussie currency. So you need to be aware of that. Tomorrow afternoon, we've got CPI in Canada. They've already cut their interest rates in Canada. We're expecting to see inflation tick up, pretty much like we're seeing elsewhere, obviously with tariffs and the threat of higher energy prices. We're seeing CPI, consumer price index, it's basically inflation, expected to show a slightly uptick in inflation. So that's basically out on Tuesday. Wednesday, we've got, this is the British flag, we've got UK inflation. This is the CPI data, consumer price index, expected to show an uptick, significant uptick. There's no big shock in this, but an uptick to 3.3% from 2.6%. Remember, the central banks around the world, why is this important, you may ask? Central banks around the world are mandated to keep inflation, or get inflation and maintain inflation at 2%. That's basically their job. If inflation is ticking up, the last thing they want to be doing, let's say the last thing, but if inflation is ticking up, they will be less expecting, or less likely, I should say, to cut interest rates aggressively. So with inflation heading in the northerly direction, interest rates are likely to stay higher, which means the currency is likely to be stronger vis-a-vis against another currency where you've got inflation maybe heading lower. So keep an eye on that, 3.3%. If it comes in higher than that, you can expect to see pound sterling trade higher, or certainly be supported in the coming days and weeks. Again, these are fundamental sort of views that you can underpin your technicals with as well. When you get the fundamentals agreeing with the technicals, it makes for a higher probability trade. If in your trading strategy you have a grading system where you grade your entries, whether it's grade A trade, grade B trade, or a grade C trade, grade A trade could be with the technicals all aligned and the fundamentals all aligned. That is a grade A trade, is where you may have in your trading strategy the say if you're risking 0.5% per trade, you may say grade A trade, I'm going to be risking 0.75%, for example. So that basically means you'd increase slightly on the risk if more of the criteria behind the trade is aligning. I've seen a lot of traders do that as well. It says, Giga says the link isn't working. Okay, well, hopefully we'll get that sorted. Not sure what is going on there. 3256 says G Camino. So yeah, good luck with that. Thursday, I have just taken a screen grab here from a well-known economic calendar. It's Forex Factory, which you can obviously all access yourself. I'm sure you all do that anyway. It's just basically telling you. So I'm going to review them obviously on the Monday, but then you can go through them throughout the week to see if anything is coming out. But this is the PMI data. Now, I'll just spend a couple of minutes talking about PMI because I think it's one of the most important data releases if you're trying to gauge, what the central bankers are doing. Central bankers love a PMI data, right? It's basically, it stands for Purchasing Managers Index, and it's basically a gauge of optimism that a country, a gauge of optimism on a survey from all the business leaders in a particular sector. So you've got manufacturing, you've got services. Anything above 50 is expansionary. So the participants of the survey are optimistic. It adds to a positive number. If that positive number goes above 50, it means that they expect economies to be expanding. And if economies are expanding, it gives the potential for nothing wrong with expanding the economies, but last thing governments want is for the economy to overheat, because that's an inflationary, and they obviously have to keep inflation down. So they would tend to have upward pressure on currencies when these numbers come in stronger than expected, or indeed above 50. That's how you'd read that. So you can see German flash PMI is coming in at 48.8, up from 48.4 last month. If this comes in at 49 or 49.5, you can expect to see the euro maybe trade stronger. You also got the UK as well. UK manufacturing 46.2 and 50 point whatever 0. So keep an eye on those. Central bankers love PMI. And on Friday, to end off the quiet week, we've got UK retail sales expected to come in unchanged from the month before, up 0.4% from up 0.4% the previous month. Again, quick economics lesson. Retail sales, if they're strong, means people are buying, spending money. If people are spending money and they're buying, what happens to prices? They tend to be supported because the sellers can demand more money for their products because there's more of a demand. So they put up their prices. If they put up their prices, that's inflation. If the government see inflation heading higher, they put up interest rates or keep interest rates high, and currencies should follow. All very basic stuff, isn't it? I didn't do any education at school. I left school with nothing, apart from maths. I did maths when I was 12 years old, but economics is the only real subject that ever made sense to me, because it's just basic science, isn't it? It's just basic, basic equations. One does one thing, another thing, will react to it. Okay, so then we've got the Canadian Canadian retail sales expected to show a downtick. I guess that's down to the obviously the tariffs and confidence in the economy. People are maybe just hanging back before they start spending money to see how the tariff picture sort of pans out over time. So just about a bit of lack of confidence. So a bit of a drop in retail sales expected in Canada. Okay, so let's have a quick look then at what has been going on. I've already talked about the bond markets. Just before we get into going around, there's a couple of things I want to look at. Just look at the currencies at the moment. This is the momentum meter. Okay, so we've got the white line. That is British pound. Okay, so pound is looking strong. Again, if you're following the fundamentals, today there's talk. The two currencies that are moving at the moment is this white line and the blue line. That's the euro and the pound. They're moving stronger because today there's a delegation from Europe in London, and they're talking about trade deals and resetting their relationship, having sort of parted their ways with what's known as Brexit. A lot of you won't know about that, but there's potential for trade negotiations and positive sort of news coming out of there. So the pound and the euro are the main beneficiaries at this moment of the weaker US dollar. The green back is showing strength. So you can see the US dollar is under pressure. Pound and euro are doing strong. As I always say, trading is all about having an edge. No one can be right all the time. No one can be, calling every trade, a profitable trade. We all have our losing trades. Trading for me is about having an edge. If you toss the coin, 50-50 outcome. You buy on a head, you sell on a tail. Over 10,000 trades, you should break even, apart from the spread and apart from the commission, of course, and maybe the overnight swap. But it's 50-50 outcome. I believe as traders, with the slightest, doesn't have to be complex, but the minimum of analysis, we can increase the edge of a trade from the 50-50 outcome that you get with a coin toss. That's all I'm doing with my trading. And if I believe I've got an edge, then ultimately, if you're disciplined and you can put a strategy to that edge, ultimately you should make money. Most people don't lose because of the strategy. People are losing because of the psychological challenges. If I'm only buying the currencies that are strong and I'm only selling the currencies that are weak, isn't that an edge? Yeah. For example, at the moment, pound against the US dollar. Pound is strong. Dollar is weak. This purple line, it's the Canadian dollar. Yeah. Canadian dollar at the moment is weak. Euro is strong. So that means buying the euro CAD now, buying the euro against the CAD now, I have no idea where it's going. But there's an edge at the moment because this is the basket. It's not just one against the other. But at the moment, there's a potential for that strong trend to continue. This is the 4-hour chart. You can look at it on the 1-hour chart as well. Yeah, Canadian dollar weakening and the euro is weakening on the daily. So you may look at the pound against the CAD as a better alternative. So this is how I'd start my analysis. Then I'll go to the individual chart and look at it. So let's have a look now just at those currency pairs. Might be nothing, and I haven't looked at them yet. Euro CAD. Okay, this is a uptrend, the daily chart. I'm just going to take off the drawings as well. So the daily chart. Now, again, I'm picking my trading battles. I'll pick my battles at the beginning of the week, beginning of the day, before the market opens, set up my trades, walk away. You don't need to be trading there on the 1 minute chart unless you just want fun for the day. Now, I don't know if there's a setup here at the moment. And quite frankly, there most probably isn't one. But the trend is up. What I would do is take out to the daily time frame chart and put in what I call the roadblocks. Okay, roadblocks where you would expect prices to react from. Now, clearly, you've got a roadblock up here. Okay, all-time high, recent all-time high. Is there any roadblock in here? Well, we're kind of at it at the moment. Yeah, this move back down with this bearish pattern. This is a bearish, like almost naked setup up here. Pulls back down. And this momentum candle showed me that there's potential bigger money moving that lower. Over 2 days, that moved down 1%. This is an indication for me that there's bigger players. So would I buy in front of this roadblock? I like the bias in terms of strong over week. Would I buy here? Potentially not. So what I'm doing here is I'm just narrowing down, finding my high probability setups. I like the strong euro. I like the weaker CAD. But I'll say not today, thank you very much. I'll hold back because of that potential roadblock. You can drill down to the lower time frame charts to build your picture. Picking the battles. Yeah, I mean, it's bounced off it a number of times on the way up. Look, bounce, bounce, bounce. Broke through, bounce, bounce, bounce. It's a level. Yeah, and in fact, we're getting a 4-hour pin bar coming in now, which for any of you that trade my naked setups, which I've been talking about for 10 years or so, this is a potential reversal pattern here. Okay, liquidity area. You know, we never know if there's liquidity up here. You never know what's, are the institutions, is there big money up there? Well, we don't know. All we can do is look for clues, and they can't hide their clues. This, to me, is an indication of liquidity. For me, the risk reward now for me on this trade, and I'm not necessarily trading 4-hour reversals, but it would be for a reversal. So Euro CAD, liked it initially as a trend. I won't buy it here. I'll wait for the patterns to show themselves. So the other one, which I feel is not going to be too dissimilar, was the pound against the CAD. Pound CAD daily. Okay, well, I much prefer this. This is a strong trending market. We've had only 3 negative days, and all of those negative days, I mean, what's this picture telling you? All these negative days, the red candles are what they call doji candles. You know, doji candles with big wicks either side. Doji basically means indecision. I don't know if it means that in Japanese, but that's the Japanese name for these candles. It basically means where they open and close around the same price. Indecision. And each doji was followed by a really strong bullish momentum candle after the doji. So here you had that doji, big 2-day momentum candles. Then you had this doji, big momentum, doji, momentum, roadblock resistance. You've got fresh air up to 87.60. So I'm confident with the trend. I'll look for my pullbacks to give me the risk reward. 4-hour trend following. Yeah, we're making higher highs. We're making higher lows. We've broken through resistance. For me, I will use my boomerang trend following strategy to enter on a pullback. I'll take my position on the pullback. So if this drops back down to this zone, this would be your entry. My stop is going to be the swing low that led to the new swing high. It's a strong swing low because obviously it made that new high. Okay. Your stops are going to be below the swing low and your profit targets up there. I don't know what's going to work, but I get a 2-to-1 out of that in a strong, trendy market. I don't know about you, but I think that's better than a coin toss. With all this evidence that we're in a strong, trendy market, with the evidence of a strong pound against the Canadian dollar, with evidence that you're seeing trade deals in the UK. Yeah, we had a trade deal with the US last week. You know, we're seeing potential UK-Europe deals. The evidence fundamentals is supporting here for a stronger pound. Evidence that the CAD is under pressure, weaker oil prices, building a case. So that's basically the way I'd like to attack the currency markets. Pound strong. I mean, the Australian dollar, let's have a look at the Australian dollar. Again, if anyone wants to look at anything, do let me know. Australian dollar is the orange line, by the way. And I'm not sure why the Australian dollar is so strong. Again, if you're using TradingView and you want to find out, you can look at the news. So Australia, what about Australian CAD? Aussie CAD. Aussie CAD, I think, the 4-hour chart, bullish momentum. I've got no real concerns all the way up to, there's not very much of an ATR on this one, average true range. But you've got momentum. You're not going to buy ahead of this roadblock, are you? But that's your target. That's your profit target. You never buy here, do you? You just leave it to someone else. The hardest trade in the book is to do nothing. You have a setup, comes in here, just leave it. Try that. It will, I think, really improve your win-loss ratio if you hold back on some of these trades when you see the roadblock. But at the moment, I've got space. So drilling down to the lower time frame for entries. Let's go down to the 1-hour chart. Again, you can trade this on any strategy, any really. Well, I think for me, let's make this a little bit bigger so you can see it. I would have said this zone here, this pullback, stalled here, broke through, came back, retested it, doji, off he rolled, double top, off he rolled. Yeah, this momentum was too strong to hold that level. It basically saw buyers coming in, pull back to that zone on a strong Aussie, weak CAD, stops below the swing low that led to the swing high, gives you a decent risk reward trade. Set these trades up. Stops below, profit target there, gives you 2-to-1, 2.2-to-1. Yeah. Remember, it's all about having an edge. You've got a strong Aussie, a strong CAD, a weak CAD. That would be something that I would be interested in looking at. Let's have a look at some questions quickly. Andrew, how do we configure our chart to show all the back baskets using the comparison tool multiple times? Are you talking about the momentum meter? Are you talking about this thing here? If you're talking about this thing here, this is what I call there's quite a few out there now. I had this coded for me many years ago on MT4, actually, many years ago. I had some coders working for me. And then I worked for another company, which basically sort of I had another company that I worked for called Forex Signals, and we basically had the guy there that worked for me there basically code this up. So it's on TradingView now. You go to indicators and you type in momentum, and there it is, momentum meter for 8 top currencies. Here's my man, and there you'll find it there. But there are other currency strength meters out there. I know what's behind this one because it's my own code, not my own code, but my own thoughts. He coded it for me. It's based on a moving average theory, with the lines representing the distance between the 20 moving average away from the US dollar. I don't want to go into too much detail, but that's what it is. That's how you get a hold of that. If that's what you are asking. Yeah, we paid out millions. Let's have a look. Look at this.
Raj, congratulations on being over $100,000 of simulated profit. How does it feel to be so successful?
It feels great, and I appreciate the opportunity to be here. And
can you hear that?
I mean, when it went over $100,000, I mean, I guess for some people that's a psychological milestone. It's that 6 figures, isn't it? Did it have any sort of effect? How did it feel?
Yeah, I didn't even realize I hit 100K until I got the email from you guys.
What are your plans with it?
No current plans, just to
I don't know how to turn them off.
Just try and
how do I turn that off?
While leaving some buffer in the account for the daily drawdown. But yeah, just try and scale it up to the max.
So this guy, he's sitting on 108. I don't know what it is now, and I haven't checked last week, but he's sitting there with live funded money. He can take that out whenever he wants. Did you not see? Is it this one?
How did you find Funded Trading Plus? What interested you about us?
Funded Trading.
No, not that one. Another one. I can't find it now, but yeah, she took $117,000 on a payout, and invested it in a scuba diving business. Amazing, great story. So the answer is yes, we do pay out. So there you have it. Right. So that's basically these currencies that are strong at the moment. I just want to have a quick whiz around. As I say, doing this analysis where you basically put in your roadblocks, I think should be part of your playbook on a Sunday before you hit the markets. What I'm looking at, the moment, interestingly enough, is actually Bitcoin. Okay, so we're looking at Bitcoin at the moment. And we do this on the daily, really, roadblocks should be on the daily. We are coming into a potential reversal in Bitcoin. Okay, so we had this high from the 10th of May. So what, 2 weeks ago? No, a week ago. I beg your pardon. With all these high wick low wick candles, testing it, buyers coming in. We finally break through. Obviously, the weak dollar now is was one of the reasons why we broke through. But this level here was your roadblock. We never know what's the other side of these roadblocks until the market tests it. When it tests it with this momentum candle and then it is engulfed by this bearish candle, that's a real clear pattern. Now, for those of you that have followed me over the years, you'll know that one of my sort of trademark strategies was called the naked trading strategy, which was basically what I started using in 2006 when I came on to, I lost a lot of money in 2005. I had to re-educate myself, and I just basically, based it all back. And this is a perfect one. It's not closed yet. We've got to wait for this candle to close. But this is a bearish pattern. And this could lead to a move back down below 100,000. And my support zone profit targets would be 94,000. So right there on this strategy, and you've got to take them without hesitation when you see them. Excuse me, I'm messing up the things that. Why is that not? Golly gosh. So there you have a potential setup there. You can have profit targets down there. That gives you almost 2 to 1 just following that symbol strategy. Look at this, all this indecision beforehand. Breaks through, one candle, tests it, trades lower. There's a potential. Only potential, but all I'm trying to do is give myself a bit of an edge. I use trend and I use counter trend as well. Counter trend for these big reversals at big roadblocks, and trend, obviously, which we've discussed, waiting for the pullback to liquidity, stops below the swing high or swing low that led to the new high, new low. Very simple. I don't use RSIs and MACDs, and I mean MACDs are one of the strongest indicators I would have used in the past, and maybe even stochastics, but I don't use these indicators anymore. I think the clues that the charts leave for a trained eye for me are much more relevant than just displaying price in a different way, which is what indicators basically do. But these candles tell us what human behavior is doing. Clearly. There you go. Thank you very much. Yes, correct. I've done all, yeah. So yeah, we've got so that's your level there. We've got a big level up there. If you're a trend follower and you want to buy this, well, you don't buy at 106,700. You just don't buy it. You sit on your hands and do nothing. For me, S&P 500. I think the S&P 500. This is actually my pick for the week. Roadblock resistance now. Let me just well, I've just drawn this in earlier. This line today. I don't see the stocks having a particularly bullish week. Fundamentally, I think the way that this broke through, remember this is the daily chart with a big momentum really last week when you had the sort of tariff wind back, and then you had these smaller decreasing size candles, on the daily. Last week we had this bearish pattern, which I think, looking at I'm just looking here. I know this is this is an important zone. It pulled back off it, bounced off it, and then we messed around there. I think this is an important zone, and I think seeing this price action from Friday, for me, I'm going to call my trade for the week on the S&P 500 back down to here. So this is going to be my trade for the week. Weekly target. Weekly target for S&P 500 is going to be 5770. So down into here. Look to trade. Again, it's reversal. Abstract Nomad. You always talked bad about people who make such colossal amounts on pot firms, Andrew. Let's have a look. I have absolutely never spoken bad about people that make big amounts on the pot firm. What I've said was to make it in short periods of time. I think, I don't necessarily think it's sustainable. I don't talk bad about people that do that. I think, to make huge amounts, percentage returns in a short period of time, I don't think it's necessarily sustainable. But there are traders that come in and make, they have a great run on a particular asset class and take a payout. Nothing wrong with that whatsoever. But if you want to give up your day job and become a full-time, consistently profitable trader, abstract nomad, I think that's not necessarily sustainable. But I don't think it's anything different. And when you said you had your own pot firm, it's absolutely no different, abstract. I haven't changed my stance on it at all. I've always said that 3, 4, 5% monthly return is what is achievable and sustainable. So I think with respect, you're not accurate there. But thank you for your opinions on that. It does happen. If you look at Raj, the one I've just shown you there a moment ago, he's been trading for 8 months. I think it's 128 trading days when we did the that thing. 128 trading days, and he's made and he's scaled up. He scaled up from 200,000 to 400,000, 800,000, and he hasn't actually at the time of. Don't quote me on this because I haven't checked. And I'm not really sort of involved in that side of it. But I don't know if he's taken a payout. He's just building it up. But it's taken him a while, and that's a really sustainable way of trading. And he's got a day job. Yeah. So there you are. So I don't think you're right there, but I appreciate you your comments. Nick said just price action, Andrew. It cannot be called a trademark strategy. When I say we've got some. It's cannot be called a trademark strategy. Okay, so the reason why I call it a trademark is I've been talking about it since 2015, and that's what got me famous. It got me, like 6 million views on YouTube. That's why I call it a trademark. But yes, it's just basic price action at key levels of support and resistance using other sort of other risk controls and so forth. So trademark basically mean what I've been talking about since 2015, Mr. Nomad. But if you're having a bad day with me, that's all right. That's okay, Abstract. Hopefully you make peace. That's good. Can Moody's downgrade? You could use a downgrade. The US causes to sell Americans again. I think so. I mean, that's what's happening at the moment. I mean, they're downgrading on growth. They're downgrading on bonds. That's one of the reasons why I think, Mastano, that I think the stocks are maybe under a little bit of pressure this week. Okay, I mean, but Moody's is a lagging indicator. It's not forward looking, is it? Really, it is lagging. And when you've got big tax cuts, coming down the path, with that are unfunded, it can be negative. But I agree with Isa. I think it's noise. And then back upgrade to AAA. Yeah, I agree. I would never trade on the back of just one Moody's report. I agree. Right, folks. We've just passed the 150. So we've now closed the Guess the Gold competition. So do get your seat booked for next Monday, and we'll announce the winner. Gold at the moment is trading 3.234. For me, I'm more positive of the move higher. That's basically all the time I've got today. I've got to jump on a meeting now, but I appreciate you dropping in. Book your seat for next week. Hopefully, you've all had a good guess, and we'll see you next week. It's a bit of a quiet week in terms of the macro front. I think the tariff talk and the debt crisis might be sort of on the news more than most. I think the British pound. I don't see any real reason why the British pound should be sold this week. It's mostly in for a good week. Stocks mostly going to wobble a little bit. Gold mostly trades higher, and there you are. That's my little call for the week. But if you place money on the back of those calls, then you are mostly not doing things correctly. I think you should maybe take a lesson in discipline, because I can't call a trade that's going to make you money each and every week, and no one, unfortunately, on a 45-minute stream can. If I could do that every 45 minutes, every stream, I would be a gazillionaire. So there you are. All right, folks. Thanks for tuning in. See you next Monday.